Welcome to the Riskwiser Zone, the podcast where we dive into the world of risk management, finance, and global events that shape our economies. I'm your host, Lewis, and I'm excited to have you join us today. We're starting off with a story from France, where the country is grappling with its most severe political crisis in decades. The current parliament is fractured, making it challenging for any government to pass legislation. Caretaker Prime Minister Sébastien Lecornu has expressed cautious optimism that a budget deal could be reached, which would reduce the likelihood of a snap election. However, not everyone shares his optimism. Marine Le Pen, the leader of the far-right National Rally Party, has vowed to block any government and is calling for new polls. This has added to the uncertainty and instability in French politics. To understand the implications of this crisis, let's take a closer look at the key players involved. President Emmanuel Macron is facing significant challenges in finding a solution to the crisis, while the opposition parties are taking a hard stance against any potential government. According to Heinz Zian, a political strategist and consultant, the solution to France's political crisis lies in calling snap elections to build an absolute majority. She believes that the current parliamentary system is not conducive to coalition building, which is essential for stability in the country. On the other hand, Professor of Public Law at University Paris II Panthéon-Assas, Denis Beranger, suggests that a budget deal could be reached, but it would require significant compromise from all parties involved. As we watch this situation unfold, it's essential to consider the potential implications for the global economy. France is a key player in the European Union, and any instability in the country could have far-reaching consequences for the region. We'll continue to monitor the situation and provide updates as more information becomes available. For now, it's clear that France's political crisis is a complex issue with no easy solutions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of fintech and blockchain-based lending. Today, we're going to talk about Figure, a company that's been making waves in the industry with its innovative approach to tokenizing private credit. Now, I know some of you might be thinking, tokenizing private credit? What does that even mean? Well, let me break it down for you. Essentially, Figure uses its provenance blockchain network to facilitate the tokenization of private credit, making it possible for borrowers to access capital within days of credit approval. It's a game changer, folks. But, as with any new technology, there are risks and uncertainties surrounding its adoption. That's why we're seeing differing views from major Wall Street investment banks on Figure's outlook. On one hand, Keefe, Bruyette & Woods (KBW) has initiated coverage of Figure with an outperform rating and a 12-month price target of $48.50, citing the company's early dominance in tokenized credit markets. On the other hand, Bank of America has taken a more cautious view, initiating coverage with a neutral rating and a 41 price target, citing risks around execution, regulation, and Figure's dependence on its HELOC business. Now, I'm not here to take sides or make predictions, but it's clear that there are valid arguments on both sides. What's interesting is that Bernstein has also initiated coverage of Figure with an outperform rating and a 54 price target, citing the company's potential to disrupt traditional lending markets. They see Figure as doing for lending what stablecoins did for payments, tokenizing traditional assets to make markets faster and more efficient. Now, I know some of you might be thinking, but Louis, this all sounds too good to be true, and you're right to be skeptical. The fintech space is highly competitive, and regulatory changes can have a significant impact on companies like Figure. However, it's also important to recognize the potential benefits of blockchain-based lending. By tokenizing private credit, Figure is creating a more efficient and transparent market for borrowers and investors alike. And with its provenance blockchain network, the company is well positioned to scale into a broader fintech platform. So, what does this mean for investors? Well, as always, it's essential to do your own research and consider multiple perspectives before making any investment decisions. Figure's story is certainly an interesting one, and we'll be keeping a close eye on its progress in the coming months. And that's all for now, folks. Stay tuned for our final story of the day, right here on the Riskwiser Zone. We'll be discussing the latest developments in the world of cryptocurrency and their potential impact on traditional markets. It's going to be a fascinating conversation, so don't go anywhere. Welcome back to the Riskwiser Zone. We're wrapping up another exciting episode, and I'm glad you're still with us. Today, we've been discussing the latest developments in the financial world, and now it's time to dive into a fascinating story that caught my attention. You may have heard about Galaxy Digital, a leading financial services firm that's making waves in the industry. Recently, they launched a new trading app called Galaxy One, which promises to revolutionize the way we manage our investments. But what really piqued my interest was their offer of an 8% APY on certain investments. Sounds too good to be true? Well, let's take a closer look. Galaxy One is designed to provide a seamless experience for retail investors, allowing them to trade cryptocurrencies, stocks, and ETFs all in one place. The app also offers commission-free trading, which is certainly attractive to those of us who like to keep costs low. But here's the thing, that 8% APY comes with some caveats. It seems that the high-yield returns are only available on Galaxy's premium yield notes, which are backed by their institutional lending desk. Now, I'm not saying this is a bad thing. After all, having a solid backing can provide a sense of security for investors. However, it's essential to understand the terms and conditions before jumping in. As we always say here on the Riskwiser Zone, it's crucial to approach any investment opportunity with caution. While Galaxy One may be an exciting development, we need to consider the potential risks involved. After all, high returns often come with higher risk, so it's vital to do your due diligence and assess whether this investment aligns with your financial goals and risk tolerance. It's also worth noting that Galaxy Digital is not new to the scene. They've been making significant strides in the blockchain and tokenization space. Their recent NASDAQ listing and expansion into institutional services are certainly notable achievements. However, as with any company, it's essential to keep a close eye on their performance and financials. In conclusion, while Galaxy One may offer some attractive features, it's crucial to approach this investment opportunity with a critical eye. Remember, there's no such thing as a free lunch, or in this case, an 8% APY without some strings attached. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.